Hey guys, welcome back. And today in this session, we are going to discuss two topics. One topic will be union budget, and the second topic will be balance of payment. But first, we will learn the union budget, the different terms of the union budget, and what are the budgets allocated to the different sector that we will discuss today in this session. Okay, so let's begin the session and start with the budget highlights of the features. So here you can see that budget, the word budget is not defined. That means that there is no word such as budget defined in the Indian constitutional. Okay, so at the place of budget, there is a word annual financial statement which is defined under Article 112. So in the Indian constitutional, you can see that there is no word such as budget, and instead of that, annual financial statement is defined there under the article 112, that is 112. Okay, so you can see that the James Wilson presented the first budget in India on 17th April 1860. So here you can see that the budget is a word which is not defined, and James Wilson presented the first budget in India on 17 April 1860. So before moving ahead, we have to know that what is budget, what is the meaning and what is the definition of budget. So I will tell you that the budget demonstrates the physical interpretation of the preceding year. Okay, it's the present interpretation of the preceding year, the budget, and the revised estimate of the current year, and the budgeted estimate of the coming year. So there will be the revised estimate of the current year in which we are running, and there will be the estimate budget of the coming year. And India, you know that the fiscal year begins from the 1st April to 31st March. And when we come about the definition, so the budget is defined as a financial statement that shows the expected receipt and the expenditure of the government in the coming financial year. In the simple words, what is budget? In your daily life, in your monthly basis, you plan a budget for yourself, for the electricity bill, for the entertainment purpose, for the groceries, for the light food. So you plan a different allocated budget for the different sector of your lifestyle. And here you are going to amount, here you are going to spend this much amount. Okay, so this is also the budget of government, that where they are going to receive that money and where they are going to expend it. Okay, in which sector they are going to expend it. So this is all about the budget. They estimate a budget where they will decide that this much amount I am going to receive, that is received, and this much amount I am going to invest in this sector, that is a expenditure of the government. Okay, so come to the next point. R.K. Shanmugam Chetty. R.K. Shanmugam Chetty presented the first union budget on 26 November 1947. So these are the some important points which you should know if you are learning about the budget. And the next point is, on the recommendation of Accord Committee, railway budget has separated from the union budget in 1924. So here you can see that there was earlier a single budget, but in 1924 union budget was separated from the railway budget. Okay, so this separation done in 1924 on the recommendation of Accord Committee. But on the recommendation of Niti Aayog, railway budget got merged in the union budget. Okay, this happened in 2017-18. So on the recommendation of Niti Aayog, railway budget got again merged in the union budget, and there is only one budget now which is presented by the union finance minister every year. Indira Gandhi was the first lady who presented the union budget in 1970-71. So she was the first lady to present the union budget. Next point is, the union budget is always presented by the union finance minister. So here you can see that Indira Gandhi was prime minister, but she was the additional finance minister in that period. And the last budget, which was presented by Nirmala Sitharaman on 1st Feb 2020. So this was the last budget presented by the Nirmala Sitharaman, because this is the running current fiscal year. So every year from the 2017, the budget is presented on the first day of the February. Earlier it was done on the last day of the February. Okay. So now the budget is presented by the finance minister on first day of Feb every year. Now we will talk about some figures. In every budget, what are the figures? So there in a budget, there are three set of figures. Actual figure for the preceding year, budget and revised figure for the current year, and the budget estimated for the following year. So these three set of figure will be budget in every year. So basically the features of a budget is that a budget provides knowledge about the economic progress of a country. The budget is prepared on a cash basis. A budget is a plan or program made on the basis of past experience. Such a plan or program must be systematic, organized and ready for execution. So these all are prepared in the financial term on cash basis. So basically a budget content estimates. The actual may not conform to the expected estimate. However, the estimate of the revenue and expenditure should be as accurate as possible. Okay, so basically you know that what is the budget and how it work and how government prepare it for the every physical year. Okay, so budget is a detailed financial statement. In a simple word, it is a detailed financial statement of income and expenditure during a given period. And a given period is a physical year which start from 1st April to 31st March of the next year. Okay. So here you can see that there are union budget and there are two categories which is included in the union budget. First is revenue budget, and under revenue budget, revenue receipt comes and the revenue expenditure is there. And the second category is capital budget. There and under that the capital receipt is there and the capital expenditure. So these are the sub-contents of the union budget. Revenue budget, capital budget, revenue receipt, capital receipt, revenue expenditure and the capital expenditure. Now we will learn that what are these terms, this revenue receipt, revenue expenditure, capital receipt and capital expenditure. So here it is the budget of 2020 to 2021. This is the estimated budget. 30.42 lakh crore is the estimated budget for this year, and here is the first category, that is revenue receipt. So what is revenue receipt? Revenue received comprise tax and non-tax revenue of the government, and tax revenues are generated from the income received from different tax and duties levied by the government. Okay, revenue received does not create any liability for the government. There are two kinds of the revenue received. First is tax revenue, the second is non-tax revenue. So tax revenue, what comes under tax revenue? There are two types of tax. First is direct tax and indirect tax. Indirect tax is GST, custom, excise, and direct taxes, income tax, gift tax and the corporation tax. And the next term is non-tax revenue. Interest, fees and fines comes under the non-tax revenue, and direct tax and non-direct tax comes under the tax revenue. So this is the revenue receipt. Taxes on income and expenditure, income tax, corporate tax, expenditure, all come under the tax revenue. Okay. So here is the amount 20 lakh crore. This is the estimated revenue received for this current year, this current physical year. 20 lakh crore. This is the approx amount which is estimated for the revenue receipt. Next, we will learn about the revenue expenditure. So revenue expenditure are basically those expenditure which does not create any productive asset. Okay, this does not create any productive asset. So this is very clear to understand that revenue received does not create any liability for the government. Revenue expenditure does not create any productive asset for the government. And these revenue expenditures can be interest, salaries, subsidies, etc. Okay. So revenue expenditure is clear that revenue expenditure is the payment incurred for the normal day-to-day running of the government departments and various services that the government offers to its citizens. Okay, so revenue expenditure basically includes the expenditure on the general services such as general administration and social and community services, economic services like agriculture, industry, transportation, and others. And subsidies are also a part of revenue expenditure. So here it is clear the revenue expenditure. 26.30 lakh crore is the estimated budget of the revenue expenditure. And the third category is capital receipt. So capital receipt is basically government receipt which is either create liability or reduce asset. Okay, so this create liability and reduce asset. It may create liability or reduce asset of the government. So capital receipt is basically loan, market borrowing including special bonds, external loans raised by the central government, net recoveries of the loans and advances made by the government, central government, provident fund, state provident fund, public provident fund, proceed from the disinvestment of the government equity in public enterprises. So there are basically two types of capital receipt. First one is debt capital receipt and the second one is non-debt capital receipt. So debt capital receipt is like borrowing from the World Bank, ADBs, and non-debt capitals are disinvestment. Like if you are selling, if the government is selling the asset, it comes under the disinvestment. And the estimated budget for the capital receipt for this year 10 lakh crores. Okay, this is the approx estimated budget. And the fourth category is capital expenditure. So those expenditure on the asset which may generate return. So these are the expenditure which government expend on the basic infrastructures for the future purpose like railway, highways, metros that may generate funds in the that may generate returns in the future. So that's all come under the capital expenditure. So expenditure on capital items mainly in form of loans and advances made to the state and union territory for financing their projects. Okay, so this come under the capital expenditure. Investment in share is also a part of capital expenditure. So this is very clear that revenue received does not create any liability. Revenue expenditure does not create any productive asset, but capital received can create liability or reduce the asset, and the capital expenditure may generate the return in future. So under prominent themes of budget 2020-21, the first is aspirational India. Agriculture, irrigation, rural development, wellness, water and sanitation and educational and skills development comes under aspirational India under the budget 2020-21. And under the economic development, there will be industry development, commerce and investment, infrastructure development, and there will be new economy development. And under caring society, women and child welfare, social welfare, culture and tourism, environment and climate change. So these will come under the caring society. So these are the prominent themes of the budget 2020-21. Government will focus to these sectors to fulfill these criteria, these themes of the budget of 2020-21. So this is the new tax regime which was introduced in the budget 2020-21, and for the less than 5 lakh income, now it will be exempted. Means there will be no tax till 5 lakh income. Earlier the exempted limit was 2.5 lakh, but now it is increased to 5 lakh. Okay, so this part will be exempted, and for 5 lakh to 7 lakh the percentage will be 10%. Earlier this percent was 20%, and for 7.5 lakh to 10 lakh the percentage will be 15%. Earlier it was 20%, and for 10 lakh to 12.5 lakh the percentage will be 20%. Earlier this percentage was 30%, and for 12.5 lakh to 15 lakh Earlier percentage was 30, but now the percentage is 25%, and above the 15 lakh the percentage will be 30%. So these are the changes in the new tax rate. Okay, so this is the new tax rate for the fiscal year 2020-21. So here is something very interesting. Like this is the picture of Union Government website. This is provided by the government, that where the rupees come from. So there are the percentage which is shared by them, that the non-debt capital received are 6%, borrowings and other liability will be 20%. Non-tax revenue will be 10%, custom will be 4%, GST will be 18%, and corporation tax will be 18%. Union excise duty will be 7%, and income tax will play a part of 17%. So these are the percentage like where the revenue will come to the government. And this is the expenditure of government, that where the rupees will go. So here are the percentage, like 6% will go to the pension, 9% will go to the centrally sponsored scheme, 6% will go to the subsidies, 8% will go to the defense, 18% will go to the interest payment, 20% state share of tax and duties, 10% to finance commission and other transfer, and 13% to the central sector schemes, and 10% will be the other expenditure. So these are the estimated percentage of revenue and expenditure shared by the government. These are the major expenditure of the government to the different field. This is the Ministry of Housing and Urban Affairs. This image will be not so much clear because this is the image downloaded by the website of government, so that I can give you the accurate and the very easy way to understand and to note down the expenditure of major item. These all amount are in the crores. Okay, so the amount allocated for the Ministry of Housing and Urban Affairs by the government in the budget is rupees 50,040 crore. This is 50,040 crore allocated for the Ministry of Housing and Urban Affairs. And here is the 67,112 crore allocated to the Ministry of Health and Family Welfare. You guys can write it down, so you can make notes of this amount, or you can find it in the PDF also, which I will provide you. So this is the amount 67,112, which is allocated to the Ministry of Health and Family Welfare. And the 72,216 crore is the amount which is allocated to the Ministry of Railways. This amount is allocated to the Ministry of Railways. 91,822 crores allocated to the Ministry of Road Transport and the Highway. This is amount allocated to the road transport and the highway. In exams, there are different questions which can be asked, like what amount allocated to which sector, like 67,112 amount is allocated to the which sector. So you have to remember the both, the amount and the sector. Okay. So 91,823 crore allocated to the Ministry of Road Transport and Highways, 99,312 crore allocated to the Ministry of Human Resource Development, and 1,22,398 crore allocated to the Ministry of Rural Development. This amount is allocated to the Ministry of Consumer Affairs, Food and Public Distribution. This is distribution, Ministry of Consumer Affairs, Food and Public Distribution. I will provide you the complete report in very clear image in the PDF which I will provide you. This is just for the reference so that you can understand. So this is the amount 1,42,762 crore which is allocated to the Ministry of Agriculture and Farmers Welfare. 1,67,250 crore allocated to the Ministry of Home Affairs, and 4,71,378 crore is the amount allocated to the Ministry of Defense. I hope that the amount are clear to you and the sectors which are allocated by them. So this is the amount which is allocated to the different sector. These are the major sectors of expenditure by the government. These are the welfare and the development part of the expenditure by the government. Okay. So here we understand that what are the budget, who present it, what are the different receipts, capital expenditure and the revenue receipt, and what are the different amounts, what are the new tax rate. We understand most of the things about the union budget. And now here are some schemes which are important where the budgets are allocated, which you should know. And the first one is PM Kisan scheme. Among all the scheme, the PM Kisan scheme, income support to farmer, has the highest allocation in 2021, which is at 75,000 crore. This is the highest allocated amount to a scheme. And the next is Mahatma Gandhi National Rural Employment Guarantee Scheme, which is the second highest allocation in 2020-21, which is at 61,500 crore. This is the second highest. This is the first highest because the second highest, and the third highest is National Education Mission, and the amount is 39,161 crore. This is the third highest, and the rest are National Health Mission. The amount allocated 34,150 crore to this scheme. Integrated Child Development Service Scheme got 28,557 crore. These are the different amounts of the schemes which you have to note down, which you have to memorize for your exams. Next is Pradhan Mantri Awas Yojana, 27,500 crore scheme allocated to this. Pradhan Mantri Gram Sarak Yojana, 19,500 crore allocated to this. Pradhan Mantri Fasal Bima Yojana, to this scheme government allocated 15,695 crore for the budget year. And the Amrut and Smart Cities Mission, the amount allocated is 13,750 crore. Green Revolution, 13,320 crore. And Swachh Bharat Mission, which is very important mission of government, Modi government, 12,294 crore. And the next is National Rural Drinking Water Mission, 11,500 crore. To Pradhan Mantri Krishi Sinchai Yojana, 11,127 crore allocated, and to the midday meal program amount allocated is 11,000 crore, and to the National Livelihood Mission the amount allocated is 10,005 crore. These are the different amount allocated to these different important scheme which you have to know. So you have to now note it down, you have to write it down so that you can easily remember while your exams. I will provide this too in the PDF, but if you are making notes, you should now note it down. Okay. There is one more important topic, that is balance of payment. So balance of payment of a country is basically the difference between all money flowing out into the country in a particular period. This period can be a quarter, or usually this period is a year, and the outflow of money to the rest of the world. This is all about the export and import. And what are the basic purpose to calculate this balance of payment? What are the basic purpose behind the calculation of balance of payment? So this is to know the strength and weakness of the economy in the international relations, because they will able to know that how they are exporting and how they are importing from the rest of the world and to the rest of the world. So by analyzing the balance of payment account of the last year, one can come to know the overall gain or loss from the international trade. And for the calculation of balance of payment, there are two accounts which should be categorized and which should be considered. First is current account. It includes export and import of goods and services. There will be visible and invisible trade. This type of transaction change, increase or decrease, you can say the current level of consumption of a country. And the capital account is inflow and the outflow of capital, including foreign investment, gold and foreign exchange reserve. So this is current account is regarding to the goods and services, and this is regarding to the investment. So the capital account is where all the international capital transfers are recorded. So this is the capital account. This is the image shared by the balance.com, which is here for the reference. So I will like to tell you that when we can say that there is a balance of payment deficit, when there is a balance of payment in the loss, when there is a negative balance of payment, when a country is importing more but exporting less, it means that they are importing the goods from the rest of the world in a very high amount, but the export amount is very less. So there will be balance of deficit. Okay. So in the short term, this fuels economic growth, but in the long term, it will have to go into debt to pay for the consumption, because the export will help you to beat the economic growth of rest of the country. So balance of payment in the negative, it can be harm the economic growth. And when it is a balance of payment surplus, when the country is exporting more, like when you are providing more to the rest of the world and taking from the rest of the world in a very less quantity, then there is a balance of surplus. There is a balance of payment surplus, and this surplus can boost the economic growth in the short term, but in the long term it will become too dependent on the export driven growth, and that will also play a negative influence on the economic growth. So both are merits and demerits in a particular way. There are a limited period and a limited amount which should be good for the balance of payment to economic growth. So this is here we know that what are the balance of payment and how the balance of payment is calculated, and what are the balance of payment deficit and what are the balance of payment surplus. So today in this session we'll learn about the union budget and the amount allocated to the different sectors, to the different schemes, and the balance of payment. In the next session, we will come with the next topic. So till then, keep learning and go to the video again and write on the notes and write on the important notes. Okay. Thank you. Thank you for watching.